Hello, everyone. Good afternoon. Another very warm welcome to an episode of our Digital Trader Summit. Today, I'm not in the Enmacc offices, obviously. I'm on the road, but I absolutely wanted to squeeze in this episode because, yeah, exciting times in the gas markets. They are somewhat on fire. And yeah, 2 weeks ago, just on short notice, we said let's have a conversation here with you as our audience, making sense of what's going on around us. And whenever I need to better understand what is going on in the gas markets, I rely on what I call my oracles. One of them, Anne-Sophie Corbeau from Columbia University, Wayne Bryan from LSEG leading their gas research team. I both invited them today to have a conversation around yeah, the gas markets around the Middle East crisis. How to prepare for such a session with news flow changing every hour, every second. So let's start with understanding where we are. And please, Anne-Sophie, maybe kick it off. Just tell us, what have we learned overnight? What do we make out of that? And is it just another episode in an ongoing, never-ending story, or is it a big step towards a solution?
I would say I would summarize basically what we have seen over the night by two things, much ado about nothing, and this is kicking the can down the road. Why is it much ado about nothing? Because basically within 2 weeks, what can you do? You can remove the ships which are currently loaded and are sitting in the Gulf, and you can basically tell them to go to their destination. So there is a little bit more than 1 million ton which is stuck there. That's not that much compared to the more than 80 million ton which are usually exported every year from Qatar and the UAE. And kicking the can down the road because basically, I mean, nothing is going to restart in terms of LNG liquefaction plants. I mean, they're not going to take the risk. They need to basically move empty ships within the Gulf, load them, restart the liquefaction plant, etc. This is not going to happen until they know that for sure there is going to be some sort of peace agreement and there are not going to be some missiles floating around. So we are just waiting for another 2 weeks to see whether
Hmm.
the US, Iran can agree on the two different peace agreements that they have, two proposals, and there is Israel, which is not even included. So it's not easy to see how and when this ends.
Yeah. Wayne, your take on the situation, similar?
No, I think Trump actually himself this time got himself backed into a corner, and I think most people's general consensus were we were going to see some sort of back down and the ceasefire, as you mentioned, and Anna Sophie said it's 2 weeks. It's kicking the can down the road. You can see from a price perspective what it's done to the market. It's given little bit of a relief. We've seen a rally today in the stock in Asia. I think the US futures are up, and certainly the stock markets are up here, and the gas price has lost about 50 across different contracts. So I think, yeah, this 2 weeks gives us a slight pause, but again, this rally could reverse quite quickly. No agreement is made, and with Trump's sort of background in terms of the uncertainty ahead, I think, yeah, we're far from out the woods yet. I think the markets are just happy just to see a bit of a pause in hostilities, and especially supposedly there'll be no further attacks on any.
Yeah, yeah, we have seen already last days some ships basically leaving the Strait of Hormuz, but none of them were LNG carriers, I think, or oil. And I think as well with this kind of ceasefire, no one will bring in new ships now, so we may see some leaving. Do we know how many ships are still, let's say, captured and may go out now and deliver additional cargoes to Europe? Do you have an idea how much volume is there still available short term?
I have counted yesterday 14, but I have also seen people mentioning 19. But okay, we know that this is in terms of LNG tankers in this order of magnitude. So basically not that much. And I am not even sure where they are supposed to go because don't forget that the majority of LNG is actually going to Asia. So to what extent one or two of these LNG tankers will come to Europe, this is not certain at all.
Mhm. We learned first about this kind of divide as we know it as well from the oil markets, east and west of Suez, if you wish, kind of a divide. We still have physical cargoes landing in Europe right now as we speak. Is that right? Or is the flow already, did it come to an end already?
The
I think there's
last
one on the
ones are
13th.
arriving.
Yeah, the last couple are arriving now, and then you can, for example, if you look at the UK, the standout has dropped down CM, big fall at South, obviously received volume. So you're already starting to see, if you look into the arrival schedule for next month, there's quite next couple of days is the last.
All right.
And this is quite important because, I mean, that means that, everybody was thinking, okay, we have seen a big price jump in March, which, I mean, prices have been between 50, 60 euro per megawatt hour in Europe, but we have still got a lot of LNG. I mean, I think the March deliveries to the EU were actually record high. I've never seen that high. We were still getting LNG from Qatar. In April, we are no longer getting LNG from Qatar, or maybe one or two cargoes. The market is going to be tighter because I see a lot of countries in Asia which are trying to, launch tenders and get a few ships there and there. We see that in India, in Bangladesh, and other countries are trying to do the same. So maybe we are going to see some diversion away from Europe. So this is going to start biting for Europe in April.
In April, we'll feel it. In the oil markets, there was a little bit of an oversupply before the crisis. In gas, never has been. No, I think we have been already in a rather tight market.
We were
Supply for the
getting
summer.
to a market more balanced. I think just before Christmas, we were like touching 27, 28 euro per megawatt hour. But of course, we had a cold winter, cold end of the year, and that reversed everything. Especially, we have had very low storage levels.
How do you interpret now that the price kind of changes, the drop we've seen this morning and the recent, let's say, kind of reactions to headline news from the White House mostly? Do you see them reflecting realistically the risks? And I mean, traders seem to see a big relief this morning from the ceasefire. You're skeptical.
Perhaps you can sort of see where we are this morning. Do you have that price chart?
So I have a
price
connection.
chart.
Suko, can you show that? I have a little bit of connection problem. I don't hear you really well, Wayne, but maybe it's only me.
Same for me. Same
for you? Okay. Maybe, Suko, could you show the slide from Wayne?
I mean, what I can say in the meantime is
Where
that especially on the oil market is that the price has been really reactive to whatever President Trump was saying. I mean, it has been quite remarkable, the volatility that we have seen over the past few weeks.
Can you hear me now, Jens?
Yes.
Now it's better. Now it's better.
I'll just look off my headphones.
And here's your slide. Here's your slide.
I would blame the head. So yeah, I mean, if you look to, obviously you can see the little small arrow there where the rally started, and prices obviously, as we were saying, 50, 60 euros a megawatt hour. But if you look this morning, they've come back down. We're at 45 now, 44. If you look on a front month basis, they're also down about 15%. So we kind of lost about 15 euros from the high. But interestingly, again, we talk about the storages. If you look at the second pane down, the storages were at 35% exactly this time last year. We're at 29 now. It's not a massive drop compared to last year. So it's quite interesting from that perspective. And actually, this time last year, the price was only fractionally lower. Before even the conflict, and as Anna Sophie said, you saw the prices around the 26, 27 mark earlier into December. Then a bit of cold weather, some of the geopolitical murmurs started, and it's sort of risen. And then, of course, we saw that big jump. So I think the price now is, maybe it's underpriced and still a bit of the risk that could happen, because we do know over the next 2 weeks, if something goes the wrong way, that price drop is going to reverse quite quickly. And as we both said earlier, we've just kicked the can down the road for a couple of weeks. And I think today's price drop reflects that. I think to look from a pricing perspective of how the market views it, you'd need to see the price fall back down to sort of that 30 level. That's when you've got a real signal that we're good to go again. But I think that price is a long way off at the moment, considering the challenges ahead over this summer. Now we've lost that flexibility. And just lastly, the volumes as well. you could see at the bottom half of 2026, they ramped up quite strongly compared to last year. And that feeds into the volatility you were talking about. And for us at LSEG, doing these daily morning price forecasts, I mean, yeah, they can get blown out the water quite quickly. And we've seen a lot of the sort of other side of the pond joining the market at sort of 1, 2 p.m. And then the sentiment completely changes. So, yeah, we've been living in a news flow driven pricing environment now since the start of this conflict. And I don't see that changing, maybe a slight slowdown over the next ceasefire period. But yeah, again, any negative headlines are going to adversely affect the price again in either way. So, yeah.
Yeah.
What I also find very interesting on this slide is how flat EU gas storage has been. I mean, it has been remarkable, but basically we started the war on 28th of February. I think we were slightly above 30%. Now we are at 28%. We have been navigating between 30% and 28%. And I think this is reflecting people already thinking, okay, so I am looking at the prices needed to refill storage in summer. I'm seeing that the prices are much higher. It's probably much better for me to keep the gas within storage than getting it out and refilling later, because I have no idea, and I know that from the war in Ukraine how long this one is going to last. So let's be cautious, because before everything started, and especially in January when we were looking at storage, a lot of us were saying, it's really depleting very fast. We are probably going to be at 20%. But in the end, we seems to be, bottoming at about 28%, which makes a huge difference for the need to refill this summer. And this is actually the only good news in this whole environment, the fact that we have not completely depleted the EU gas storage, because this is not going to be easy. And honestly, if we get to 70%, well, that's good.
And it stays a worry for this year, how to
It's
refill at these
absolutely
kind
so.
of prices. Yeah.
This is the number one worry, and I don't think this is absolutely priced in when I am looking at the curve. When I am looking at the prices, I don't think people are anticipating that, because all the price forecasts that I have seen, and it's even more remarkable when you are looking at the oil price forecast. So the oil price forecast, you have an increase, and then suddenly, miraculously, I don't know how, the Strait opens and zoom, it's coming down. And that is actually not taking into account the second thing, which is very important in this whole crisis, which is the potential destruction of energy infrastructure. And we have seen that happening with Qatar. And if you have long-lasting destruction of infrastructure, well, then we are in a totally different environment.
Yeah. As we have, I mean, there were some publicized numbers around, what is it, 17% less capacity? Is that correct?
Yeah. 3 to 5 years.
Nominal, yeah, but as my good friend Mehdi Touil mentioned, I mean, it really depends, to what you are comparing, because actually Qatar was exporting above nameplate capacity. So it's a little bit less, but still, I mean, we are missing 2 trains. I have seen the pictures, definitely. It's going to take some time before repairing these liquefaction plants, but that seems to be quite certain.
So instead of the big wave of LNG coming to market from Qatar, we see more of a maybe normalization. I think a couple of months ago, we discussed a potential oversupply, especially coming from Qatar. That's not a thing anymore, no?
From a wave to a trickle.
It depends. Okay.
It depends. I mean, okay, let's imagine blue sky scenario, everything reopens, so it takes some time to restart the liquefaction plant, etc. But basically, we are looking at a normal situation by summer. So that means that 2026, we don't really have an increase in global LNG supply, or very limited. And then there is also a delay in the construction of the North Field expansion, which is only basically kicking in sometime April 2027 instead of late this year. So I would say the oversupply is probably going to be for late 2027, 2028. But if we have a scenario with more lasting destruction, or the Strait of Hormuz doesn't completely reopen, then I think the story of the LNG oversupply may be gone. But then the question is what happens to demand? And this is a key question that everybody needs to ask themselves right now.
We hear a couple of rather prominent commentators talking about the decoupling of the paper markets and the physical reality. You touched upon some different views as well there. Is this really a thing? Are more markets following different signals, the financial markets decoupled from the physical reality, how things may trigger through as well? Or is this just as well more kind of crisis headlines from some commentators?
Sorry, when you say, sorry, Jens, you were saying, so when you say about do you mean paper versus physical, is there a real big disconnect?
Yeah, some people like Jeff Curry, the ex-Goldman guy, he was elaborating at length how basically the financial markets are not fully reflecting the physical risk he sees in the supply chains, especially the oil side, but as well on gas. If we talk about fertilizer markets, etc., what kind of impact that could have. Would you share that concern that markets, you're being very close to the physical realities? We just discussed really protection facilities. Do you see this as an overall picture that there's a kind of a disconnect, or would you say markets have been reacting in line with what you see as well?
A bit of both. I think some of it you've seen, like stock market moves, gas market moves, kind of moving in tandem. But I think you're right to highlight if you look further down the road, the fertilizer situation, European industrial competitiveness. If you look at the recent surveys from the PMIs, they're not that reflective now. GDP has been dialed down. There's obviously inflation leading to interest rates rising, not being cut. I think the next ECB meeting's in like 3 weeks. And there was a lot of surety that they were going to increase the rates. Now, perhaps there's some agreement in these next 2 weeks which would loosen it. But I think sometimes there has been a bit of a disconnect. But maybe you're right in terms of they're not fully understanding the risk in the financial markets, because today everything's just gone whoosh up very strongly. And as we said at the start of the program, a little bit has happened, but it's not really a massive change. It's just the threat of further attacks has sort of dimmed for 2 weeks while they try and come up with a peace plan. So I think there is some level of disconnect. Yeah.
And Sophie, your view on this, or do you have an opinion?
Not really. I mean, I have to say, I really focus on what is physical. That's my thing. You can say that this is my engineering side.
Very good. Excellent. If we maybe touching upon we mentioned storage, and we have heard it as other kind of government or policy interventions, especially on the oil markets as well, to somehow limit the effects on the real economy, let's say, or on taxpayers as well. You think we have seen there is already the peak of the debate, or will European governments have to act, specifically European governments, in a different way going further if this continues? And how should they act, maybe concerning the gas storage dilemma we just discussed?
What is interesting is because Asia was impacted first, also because it takes less time to go to Asia. So they are already feeling the brunt of the disruption. And what we are seeing is that coal switching a lot, pretty much every country.
Yep.
We are seeing also some earlier restart of nuclear, especially in Korea. They are trying to advance that a little, make that a little bit faster. We are seeing also demand destruction, in particular in Southeast Asia, so India, Pakistan, Bangladesh. And we are also seeing some countries trying to get their hands on additional LNG cargoes. So these are the things that we are really seeing. Now, in Europe, we have seen discussions. We have seen some ideas floating. We have seen calls to more energy efficiency, less demand, etc. Nothing really concrete yet. I mean, much more at the discussion level. And I mean, God forbid that the market correction mechanism or the Iberian Peninsula mechanism come back. I mean, the market correction mechanism was a mechanism whereby prices would be capped, TTF price would be capped, which, I mean, as we all know, would be an absolute disaster, because what would happen then? The LNG cargoes will go to Asia. So stupidity number one, don't cap prices. Stupidity number two, capping prices in the power generation sector. That sounds like a good idea because Iberia did that, but at the end of the day, the end consumer was still paying. It has literally inflated gas-fired generation in Spain. So I think this is exactly what we don't want to see happening, which is inflating gas demand. We need to reduce gas demand. So I would say, I mean, try to reduce demand as much as you can, including on the power side, because if you have less power demand, then you have less gas demand in power. We are entering the spring to summer season. The demand is going to come from industry. We don't want to touch too much industry and power generation. So where we can act is decreasing demand in the power sector as much as we can. So trying to incentivize everybody to do that. And I know this is not easy, but guess what? I mean, how many times did I come in an hotel and you had like a full heating or full AC or all these things, which I mean, we have still so much inefficiency in the system. So lots of things to do. On the storage, I have no doubt that some countries are going to go alone and subsidize the refilling of gas storage. It's not really exactly how this should be done, but hey, some countries have still full pockets of money.
Less and less, I guess, yeah, because we all remember
Not in France.
the last years, exactly how this
exactly.
turned out.
And looking at, you mentioned like measures as well, and don't forget with the EU storage flexibility, they've got quite a few bits of flexibility. I mean, we've had 90%, now it can be 80. There can be further deviations to that, depending on adverse market conditions. So that's also a mechanism. And I agree with Anna Soph about the gas price cap. I think they set it at 180 last time, and it's like, who put it there? It's the strangest idea, this gas price cap. I don't think we ever went above it once they set it. And also in demand destruction, I mean, that's happening. LDZ demand destruction is actually, I think, the message from the conflict in Ukraine, whereby we need to reduce our gas. That's actually been listened to. I think we look at that LDZ demand destruction at LSEG, and we've seen it increase to 19%, which is 4% above the EU's target. And I think people would have already learned from last time. Behavioural changes have already been present. So if we do get an extension of this crisis into the winter, I think people are already very aware about not to overuse their energy, whether that's air conditioning, whether that's gas usage. People have already moderated their usage thanks to what happened previously. So I think there's still opportunities there if we go into the winter. And we mentioned industrial demand. I think we've seen some of the impact of that, especially from the chemical sector, which has posted some very, very, very bad numbers towards the end of last year on an annual basis. So I think we've still got some levers in terms of lowering demand a bit.
Can I mean, offer an anecdote? I am teaching. I'm not going to name the school, but I mean, every time I enter the room, I have to literally open the windows because the temperature inside the room is 30 degrees in the middle of the winter. So I think in terms of using energy more efficiently, there is a gap in many places.
Yeah. At least that's that.
Sorry, where was that, Anna Sophie, you were teaching? Where was that you were teaching? Was it in Europe or in America? Sorry?
No, in Paris. In Paris. Oh, I mean, the US is terrible. Air conditioning. Yeah. I mean, over there, you basically bring up your turtleneck any time. I mean, during summer, during winter, during spring, especially when you're in Houston.
Full power. Yeah.
At least in Europe, it stays a thing. Just spent some time in the US where I think energy efficiency is not a thing at all anymore. It's just about how to produce more, especially for the power sector. So very different market environment, very different political environment and ambitions. There have been as well first discussions around what is the role in the future of a TTF versus Henry Hub. Where should global players actually hedge on the producing side and as well on the demand side? Do you have a view on this?
That's an interesting one. I mean, I guess it depends where you are and what kind of risk, you are exposed to. I know a lot of people in the US who don't want really to be exposed to TTF because, they don't think that they control that. At the same time, you can say that if the market are at equilibrium, TTF prices should be influenced by Henry Hub prices because basically they're influenced by the cargo at the margin, which is very often a US LNG cargo. But of course, this is an oversimplified view of markets which are balanced, and they have not been balanced for a while, unfortunately.
Exactly. A balanced market, I think from listening to you, we cannot expect in the next couple of years. We will have this kind of two different worlds in terms of gas prices. No, this will continue to influence as well industrial policy and
Exactly.
everything which comes with it. Yeah.
Yeah, indeed.
Let me ask as well our audience to participate. We have the chat function here in Zoom. You see it down there. Everyone who wants to contribute who has an answer, a question to Anne-Sophie and Wayne, please just drop it in there. I pick it up and share it so we can continue the conversation and address your interest.
I think there was a question on why Asian gas prices are now higher than in Europe, which I mean, for me is kind of normal because this is where, the LNG is basically missing. So this is signaling scarcity in the Pacific Basin compared to the Atlantic Basin. And that means that you need to try to attract US LNG cargoes because, I mean, this is where most of the gas is coming from right now to go to the Pacific Basin, which means, longer journey and additional cost. So it's entirely normal, in my opinion, that gas prices in Asia are higher than gas prices in Europe. However, this will have consequences for Europe because if the situation doesn't normalize rapidly, then we are at the risk of not having enough gas in storage.
Yeah. And it just puts the cost up for everybody as well. And as Anne-Sophie mentioned earlier, there's alternative ways now of generating. I think Korea now have ramped up, Australia have ramped up coal production to support Korea and exports. So there's many different effects, not only from a monetary, but also the climate perspective as well. But I think, Asia's typically pricing a lot more higher than Europe. But the problem is the more this crisis goes on, most basins are going to be paying and the competition will just increase and the price will get higher. And you see the likes of Bangladesh are struggling, Pakistan, and these are the countries that really struggle because they can't really compete with the deeper pockets that we have here in Europe. So, I'm not also surprised.
What's interesting, however, is China. I mean, on paper, you would think, China on the gas side is the most impacted. But in practice, this is also the country which was reselling LNG cargoes in March, which is very, very interesting. And I have always been kind of bearish I have been bearish on China for the past 18 months because of all the geopolitical events which have been happening, the trade war between China and the US and the US LNG cargoes, which were no longer going to China. Then the first Iran war in June, and suddenly when you are China, you realize, do I want to be too dependent on Qatari LNG? Maybe this is not such a good idea. And finally, this is happening. But you know what? They are doing fine. I mean, they are absolutely doing fine. They're adjusting the demand, but at the end of the day, they are coping. And actually, their LNG imports in March have never been that low in like years. So this is interesting.
So you think they have already adopted? They could have bought more in the market, or is this a decision to buy less?
Their storage is in a healthy position. People always forget that China was in 2024 the fourth largest gas producer. Their production last year was 260 billion cubic meters. They are roughly the same level as Iran. And they can actually increase that. They are trying to get a bit more additional pipeline gas. I'm not sure about that because the only way is actually Central Asia. And they have a lot of demand side adjustment possibilities. I mean, in terms of gas demand in the power generation, which is not that much in percentage terms, but which is still substantial in volumes. I mean, they can adjust and they are already, putting some measures in Guangdong in order to reduce gas demand in the power sector by more than 50%. So this is happening. And you know what? I mean, this is China. So everything comes from the top. If people at the top say, okay, no more switching to gas in this and this and this sector, hey, people down the line, they are going to do what the people at the top are saying. Very easy.
In Asia, in general, I think gas storage is managed more politically, from the governments than left to the markets. And we just received here a couple of questions regarding gas storage in Europe. Try to sum it up a little bit. Can we really achieve a 70% gas storage level, a completion level till end of the year, if we just rely on American, US LNG? Is that feasible, especially in the context of the current summer-winter spreads we see?
I believe
It's
so.
not going to. Well, it really depends.
Come on.
It really depends.
I believe so.
It depends. Okay, if the crisis is ending up soon, should be okay. If not, it's going to be tough. I mean, if we want to be roughly at the same level as last year, we need to inject in the about 50 billion cubic meters. So, I mean, at the end of the day, that means that during summer, if we want to be roughly at the same levels, we need to import something like 85 billion cubic meters over the period April to October. So this is quite a high level. Unless you are really reducing gas demand and you are maybe adjusting storage injection. But that was a number for to reach about the same level as last year, which was 83% in October, November.
Wait, you had a different, similar
No,
view?
just because in our summer outlook research,
Yes.
and bear in mind we're looking at Northwest Europe here, which is still, you know, France, Germany, the largest, some of the largest ones. We said if there's a sort of normalization of flows by sort of June, as in we see like things easing, shipping continue, we see it at 81%. By November, it would go to 81%. If you push that down the can a bit, and I think our point where it being 65 to 75% would have been a July to September restart, then we're looking at 65 to 75%. So it'd be pretty similar to the total EU, but this is Northwest Europe. So that was our view. That's what I was saying. It just depends on when this situation will not even normalize, because it won't normalize now for the next few years, as we know, but kind of stabilizes and we start seeing LNG flowing through the strait. But I think we still hit 70% by November, personally. And I think now what you're seeing is people are scared to start really injecting into storages. Now, some people are going to try and wait till the last minute, thinking the prices will collapse. We've seen that before, but that can work the opposite way. And I saw the EU commissioner was warning against this the other day, telling member states to start your filling early. And we see now the prices has fallen quite considerably today. But if you still look at next year, summer's still trading above next winter. So it still shows there's risk in this market.
Yeah.
I would start refilling now, progressively, rather than having the air defect that we saw in summer 2022.
See that before?
Absolute disaster.
Carnage.
Yeah.
Absolute carnage. People wait till the end.
No.
I think with the additional concern that if we are dependent on US LNG, we are as well dependent on all the political discussions and tactics to the midterm elections in the US, which I think we are probably not prepared to actually to deal with.
Yes, but okay, this is where I kind of disagree, I mean, with a few exceptions, who controls US LNG? A lot of international players. So is President Trump going to call Patrick Pouyanné and tell him, send the LNG somewhere else? I don't know. So, I mean, okay, there are some US LNG players which, could be told, send the LNG there and there. But even them, I mean, they are private players. They are making commercial decisions. So, the extent to which, I mean, the president, the US president can actually say the LNG has to go there and there. I mean, the only thing that we have seen is when there is a trade dispute between China and the US, okay, then China put tariffs on US LNG and the LNG was going somewhere else. But I have still to see US LNG not going somewhere because the president told them so.
Let's spin this a little bit further. There have been the first kind of rumors around potential export tariffs, which actually the government could apply to exports to Europe. So you would rule this out completely?
You mean from the US or from Iran?
Yes, from the US. That US deploys kind of tariffs on top to make it even harder.
I have heard pretty much everything, but honestly, I mean, if we are eventually moving into a normalized situation, this is basically putting, disadvantaging US LNG. And don't forget that, I think the big danger that all this crisis is bringing to the global LNG market is actually destroying LNG demand in the long term. So don't do that.
All right. I try to pick up more questions here, and we get a lot. Thanks a lot for the contribution here. I think what always attracts attention is the Strait of Hormuz. Can it be really be managed? Will there be kind of, yeah, as well, what is it, kind of transit fees deployed? And how could that actually work? I mean, Anne-Sophie, I've seen you commenting on this as well already. Please share that view and give us a little bit more insights into the technical details. Yeah.
Well, I mean, I don't know more than, this proposal of
Mhm.
putting $2 million per cargo. And we don't even know whether this is in or in and out. So we don't know that. But 2 million for a normal LNG cargo will be $0.5 per MMBTU, which is kind of expensive already. It's much more than what you have for the Panama Canal. But most importantly, that would be totally unprecedented. I mean, you can do that on the Suez Canal and Panama Canal, but you are not supposed to do that on international waterways. So thank you very much, President Trump, for basically giving a lot of money to Iran. They didn't even ask for it. Now you are giving them, I mean, potentially the control of the Strait of Hormuz. I mean, is that the result of this 5.5 weeks of conflict?
That to
Yeah.
me is the big problem, I think, the big sticking point. Are they going to just give, like you said, 2 million for each vessel? And it gives them, again, complete control. In a way, Iran have kind of won. I don't mean, obviously, there's been a lot of damage to the country, which of course, but in terms of if they do get that clause allowed, I'll be amazed if they would allow that, to be honest. Because again,
Yeah.
this is full on. You talk about, yeah, there might be regime change thing, but if you allow them to charge this amount of money for this, yeah, it's going to cause. And who pays? The end user. Simple as that. Yeah.
Yeah.
That's who
Exactly.
we are.
I think it's one way as well as a ship owner to get a cargo out of the Strait of Hormuz, but bringing new vessels in is a totally different thing. Someone taking that risk, no. I think we had a couple of questions here, which I would summarize a little bit as the probably impossible question to ask, but if the strait stays open and things would normalize, how long would it take to get all the vessels lined up again and get to something back like a normality? Is this an answer you have a view on, or
I would say couple of months in order, I mean, you
a
need to
couple of months?
restart the LNG liquefaction plants. You need to basically, bring in all the LNG tankers, which are, I have no idea where right
They're
now,
everywhere.
and everywhere. Yes, that's a problem. You need to load them, and loading a ship. I mean, this is what takes a bit of time. So, I mean, there are all these logistical questions, but it would take some time. Hopefully, there have not been any further damage, to the upstream side. I think this is what I would be the most concerned about. For the Emirates, it should be relatively easier because this is a much smaller facility.
Yeah, it's
Okay.
all eyes on Ras Laffan. That's actually what it is. Yeah.
One question which I found interesting here. What about gas exports from Iran to Turkey? Turkey has been as well a little bit at the sidelines here of this conflict. Could they actually even benefit from it? Will we see some of that gas in Europe?
Last I checked, I think yesterday, the flows to Turkey were still ongoing. They have not been disrupted. There have been some rumors that they have been. So, according to the information I have seen, they have not. And also, one good news is that the flows of Israeli gas from Leviathan to Egypt have resumed a few days ago, which is a good news because that means that Egypt is not going to be looking for additional LNG tankers to replace the missing pipeline gas from Israel.
Yeah, I heard about that. And we have as well record imports now from Russia again on LNG,
Yeah.
if I'm well informed.
Yeah.
What a surprise. They ramped up. No surprise there.
So I guess we accept that for the moment.
Yeah, it's palatable, isn't it now? Now, in the current situation, the EU see it as more palatable, which is quite interesting.
Until the 25th of April.
Yeah. Maybe they'll extend that deadline as well. Maybe that gets kicked down the road a little bit. You never know. That's another can that could be kicked further down the road to allow more gas into Europe to secure our storages ahead of the winter.
Well, how do current decisions on the Russian gas phase out affect this storage season this year overall?
Well, there will be a little bit less pipeline gas and LNG, but I mean, the main impact on flows are really the 1st of January 2027 for all the LNG and the end of 2027, so the 30th of September 2027 for the end of Russian pipeline gas. Between them, you have slightly reduced flows, but this is not the main description, the main reduction.
Yeah, and a lot of that's already been priced into the market. But an extension to the current legislation would, of course, lead to a bit more increased gas and potentially lower prices. But again, that's something for the EU to manage. I think they said recently, whatever happens, they won't turn back the clock in terms of the total deadline, but maybe short term they could extend a few weeks or months into the summer. But like Sophie said, I don't see the hard stop next year being amended personally. We'll have a lot more supposedly LNG online then as well, so we should be in a better position. Should be.
For many gas and oil traders, these are profitable times. We have seen the headlines from Total and from Shell and others making big profits in these market environments. Are there losers as well on the trading side, or what is your impression?
There has to be.
Everyone's winning. Everyone's winning.
I don't think so. I think there are people who are making the wrong bets. I think some people got surprised. Also, I mean, when you are looking at the volatility of prices, oil prices and gas prices, I mean, especially, you know, with the announcements that we have seen, which have led to like a -15, +$10 per barrel. I mean, how do you actually manage that? I don't know. I mean, this kind of level of volatility, which is completely unpredictable, is very difficult to manage.
Yeah, I'm glad I'm not doing my previous role when the volatility is like this, because even you see these big swings. If you're hedging or buying future, where you got stop losses, you're buying for next year. I've got a few friends that obviously still work in that, and it's just it's not easy at the moment navigating this heavy volatility, especially when you've seen the increased influence from hedge funds, namely US hedge funds, and other players from the financial world have been getting involved in TTF because of that volatility. So there is winners, but there's certainly a lot of losers.
So we'll follow the markets, I guess, and wake up every morning with a new headline in mind and what could it do. I think we all agree this crisis is not over. It may become a real crisis if this is continued with very strong effects on our storage. But as we said as well, around markets, around fertilizers, etc., which has really, I think, strong implications, not only on Europe, maybe more in other regions of the world, but we shouldn't forget that. So thanks a lot at this time to all of you. It was a real pleasure again to seeing you here and getting smarter about what's going on in the gas markets. And I will continue to follow you as well on LinkedIn or wherever you communicate with the market. Love it. Please continue to do so. Hope to see you soon again. And big thank you as well to the audience contributing with so many questions. I have to apologize. I couldn't pick them up, all of it. But
send them to me on LinkedIn or to Wayne as
exactly.
well.
Reach out. And if this continues, we'll be here with another episode and continue the conversation. Thanks a lot, everyone. Have a good day. See you soon. Bye-bye.
Thank you.
Thank you.
Bye-bye.
Bye-bye.